difference between a whole life policy and an index universal life insurance policy for a child. Now, regardless of who you are or how old you are, everybody needs life insurance, because if you can get insurance on your car to protect your car, if you can get homeowners or renters insurance to protect your home, you can definitely get insurance to protect your child. Now, let me explain the difference between a whole life policy and an index universal life insurance policy. Now, I personally have an index policy for my 6-year-old niece, and I'm going to explain why, but also show you the differences so that you can understand. Now, with the whole life, first thing that everyone needs to know about a whole life is that it's always going to be more expensive because they guarantee you a certain amount of money, which is a good thing, right? So you're guaranteed anywhere between maybe 3, 4, 5, 6%, which is okay. But you also have to pay for that guarantee, which is why your monthly premium will be more expensive. With an index policy, you can make anywhere between 1 to 15% depending on the company, so your cost of insurance is less compared to whole life because the company doesn't guarantee you anything. They will guarantee that you don't take a loss, but you can get anywhere between 1 to 15%. I personally like to invest in the insurance policies that have the S&P 500 attached to it because the S&P averages anywhere between 8 to 10%. And this is a long-term policy that I have for my niece, so it's able to grow over time. Now, the other reason why I personally have an index policy is because it has a flexible premium. With whole life, whatever amount you have to pay every month, that's what you're going to pay every single month. With an index policy, there's a flexible premium, which means that when I make more money every year, I can contribute more to her policy every year. The more money that I contribute, that's higher than the cost of insurance, I'm able to overfund that policy and she's able to take that out, which means I'm able to invest more over the years so much that I can put in more, and over time she'll have way more money to take out compared to a whole life policy. And then finally, with whole life, you have to choose. You either have to choose the cash value, which is the portion that you can take out and live off of, or the death benefit. So for example, if you had $20,000 of cash value used on a $100,000 policy, if you took out $10,000 from that cash value, your death benefit is going to decrease down to $90,000. I personally don't want to choose. I want my niece to have protection and cash value. So when I have an increasing index universal life insurance policy and overfunded, my niece will have more money over time, and we're able to take out more money because I'm able to invest more, contribute more, but never touch the death benefit. So if something were to ever happen, she gets that cash value and the initial death benefit that I signed up for. With whole life, you have to choose. You either lose the cash value if something happens, or if you utilize the cash value, you will decrease your death benefit. For me personally, I don't want to choose. I want protection and cash value. These reasons work for me. Every insurance company is different, but when I ran the numbers with the same company and I looked at a whole life policy versus an index was cheaper. I was able to put in more. She was able to make more, which means she's able to have more for her future, which is what's most important for me. So when you're determining which type of life insurance to get for a child, you want to compare different policies, but also with different companies. But if you can compare an index policy to a whole life policy with the same company, you're able to make an accurate decision. So regardless of what policy works best for you, make sure your child is covered. You want protection and you want to build wealth for that child. And that's what I chose to do for my 6-year-old niece.
If you found this video helpful, give it a thumbs up and share it with your friends and family. Don't forget to subscribe for more insightful videos. Thanks for watching, and we'll see you in the next one.